Ladies and gentlemen of the crypto space, today is Tuesday, July 28th, and this is the best part of my day. So I welcome you. Welcome you to a place where I talk. That's kind of why I like it. So this is going to be a big fat monologue today. As you can see, the title on the screen is a UTXO macro narrative of the roots of the crypto space. I have a couple of tabs open in the browser, which, I'll save that more towards the end of the half an hour. But I'd like to talk today. This is a topic I've talked about much before, but it's something that I like to rehash quite often. You got to bring things into perspective in the context and really get a real macro narrative on things to understand why DeFi is hot, why it's only a part of the big picture, and where things are likely heading or maybe potentially heading. There's a great deal of things that could be said for certain that are going to play out over time, and then there's other things that are more speculative and questionable and likelihoods rather than certainties. So let's go back all the way to the beginning. We start with Bitcoin. So Bitcoin is the original UTXO blockchain, proof of work blockchain, and that means everything. So clearly there are countless UTXO chains that are technologically superior, and you can be technologically superior to Bitcoin very simply by modifying a couple of the protocol properties, block timing, the consensus algorithms, and clearly this is where Dash came in back in what 2015, 2016, proof of stake, give or take. And this is exactly why it's a robust set of UTXO chains that are meaningful in the big picture, and they offer choice and option. Does it mean anything is going to disrupt Bitcoin? Absolutely not. The momentum for it is way too strong. It is a first out of the gate ongoing disruption. Now, it's the same with Ethereum with regard to Polkadot and Cosmos. It's a first out of the gate systemic disruption. The likelihood of disrupting an ongoing disruption is near impossible, as proven by um, Lyft versus Uber, as proven by Apple versus Microsoft. In Apple's case, took them 20 years, but they did it. But that's the same thing. It takes a long time. Anyway, so let's talk about momentum and strength and what I like to call test nets. So Digibyte is technologically superior to Bitcoin. That there's no way to even remotely consider it otherwise being the case. Um, the protocol properties, it is the protocol properties of Bitcoin, but modified to be actually better. The block timing is constant, which means there's a dynamic difficulty adjustment every block. Whereas Bitcoin, the difficulty adjustment occurs after however X many blocks. I don't recall it off the top of my head. Point being, it's more susceptible to fluctuations in hash rate, whereas Digibyte is dynamic. It adjusts in real time after each block, which means it is more it better handles varying load with regard to is proof of work, there's a load in that regard, and transaction volume as well. And that comes down to block sizing, really, how much transaction volume it can handle and how many transactions fit into a single block. In which case, Digibyte is not overloaded in any regards currently. But because the blocks are assuredly 15 seconds apiece, that brings consistency and reliability to the quantity of transactions per second that can be processed as compared to the subtle degree of block timing variability that could occur with Bitcoin because the difficulty adjustment does not occur after every single block. So you don't have a fixed block timing. You have a target desired block timing. Digibyte obviously introduced multi algorithms, consensus algorithms. And these are very sophisticated calculations that could be done with regard to 51% attacks. And this was some work that was done with Poloniex back a couple years ago that shows that the if Digibyte was the scale and size of Bitcoin, it's overwhelmingly technologically superior with regard to its security. So clearly, it doesn't have the hash rate of Bitcoin, so it's not as secure as Bitcoin. But that's what I always like to tell everyone. That's irrelevant. Why? Why? And this is what's so important. The vast majority of the crypto space I define as testnet. Even Ethereum, even DeFi. This shit is testnet. DeFi is a whopping 4 billion, 4 billion, 3.5, whatever it's at. Bitcoin's a whopping 200 billion with the run yesterday. In the big picture of the amount of money that's out there, this is zero. We're at zero. There's nothing at all on the table. There's no money at all. So this is straight up testnet. Even Bitcoin is testnet. So Bitcoin has reached, so here's a couple pertinent characteristics to consider. Bitcoin has reached critical mass decentralization, meaning it will exist in perpetuity because enough people are contributing to the network security consensus mechanism that it's not going anywhere. And if a group of miners fall off, there will be an opportunity for another group of miners. And even if the hash rate was cut in half, give it a month, someone's going to spin up more miners. So this is what I mean by critical mass decentralization. There's incentive, and there might be instability. You might have a breakdown, but you'll have recovery and then growth, and it's a dynamic cycle, just like a stock chart. And you can see that in the hash rate charts as well as the difficulty charts. So the same thing with Digibyte. It has reached critical mass decentralization. It will exist in perpetuity. Now, here's the kicker. Here's what's so interesting. Bitcoin is slow. You're not going to do anything. You're not going to do any asset management. You're not going to do color coins with Bitcoin because it takes too long for a transaction. Transferring assets, if you have a tokenized representation of an asset, it's not efficient and it's not viable. It's viable on Digibyte, but this is where the big corporations come into the picture, and you have to really have a large macro narrative to understand the potential for Digibyte in the space. Digibyte is not currently secure enough for corporate consumption, but that is not a bad thing nor a good thing. That's just a reality. So let's say a corporation wants to do a project and they want to start storing records and managing assets using a public UTXO chain. Bitcoin's out of the question. It's too slow with regard to like strict on-chain layer one immutable transactions. Sure, layer two, but that gets complicated if you're doing 1 trillion transactions a day for whatever, an insurance firm, or you can imagine the healthcare system. So Digibyte is substantially faster. It can handle transactions, volumes, much more than Bitcoin could even remotely handle. And that's why when a corporation is going to sit down with its engineers and talk about how to consume a public UTXO blockchain, they're going to be like, what are the options? What are the choices available? Tell me the basket of UTXO that I could choose from and what's involved in actually consuming it in a real life application. And that's why I like to say in the future, there will be a basket of UTXO and some sort of all-encompassing SDK that developers will be able to interact with their UTXO of choice. In many regards, I guess BlockNet fills that void with its decentralized SPV network. So, but quite fascinating. So the point is, for any corporation to get involved with the UTXO, they're going to have to talk about security and think about security. So what are the trade-offs? So this is what a company would be thinking. So right now, a company has, let's say, a centralized data storage deployment, and they're going to replace it with a public decentralized blockchain that's going to be responsible for data storage, record management, and asset management. They're going to be replacing computers, a DevOps team that's responsible for software and firewall config and daemons and processes and cron jobs, so on and so forth. Network administration, DevOps. They're going to be replacing that with mining hardware for a proof of work blockchain or collateral with a proof of stake blockchain. So when the company is thinking about using a public ledger for this type of data storage and asset management, they also have to think about the security. They're going to, at first, be a large, probably the largest component of the security mechanic for the platform. If a company is going to throw their entire business and maybe like $1 billion worth of assets, they're going to have 150 million. Is a nice, what, 5% on $1 billion? You throw 5% into securing the network that you have $100 billion worth of assets under management launched on. Yeah, that's exactly what they're going to do. So they get all the benefits of the public blockchain, the geographical decentralization, the redundancy. It's basically global RAID, which is crazy. And you also get the general public actually participating in the security of your corporate network. But clearly, the corporation is going to have to spend a fair amount of money to overall ensure the security of the network against attacks. So this is why I like to say this is all testnet. Because if a company is about to launch $1 billion project, everything out there is just an example, a proof of concept of how this stuff is done. And that's what's so fascinating. So every time I see the argument, the conversation about UTXO chains like security and consensus, no, if they're based on Bitcoin, that's all that freaking matters. Because no corporation is going to use a chain without spending a fair amount of money to secure the crap out of the network, which is going to bring it to the scale and scope that Bitcoin currently has. So, and this is the principle that I always think of. If you scale Digibyte to the hash rate and amount of proof of work consensus that goes on in Bitcoin, all right, fine. It's not going to be the same as Bitcoin because Bitcoin is just beyond massive. Nothing's going to compare. Even a large corporation with $1 billion project isn't going to compare to the hash rate for Bitcoin. But if they're throwing a 50 mil chip into the security consensus for Digibyte, that's going to be a serious hash rate bump as compared to what it is today. 10x, 100x, 1000x, the hash rate is going to be serious security. So Digibyte currently is in testnet, waiting for consumption. It's a public utility, meaning any corporation at any point in time could say, all right, let's do it. What do we need to do? And that's where I would come in and say, you got to think about security. You're going to be replacing your DevOps. You're going to be replacing your hardware deploy, your server infrastructure, and replacing with ASICs and mining rigs and maybe GPUs, which is a very minimal piece of software required to manage the GPUs. Raspberry Pi. So this is what the corporation is going to be thinking about. Now, it's not just going to be proof of work. There'll be the proof of stake chains. So the corporation's like, I want to manage records and deal with assets. And that can be done on any of the UTXOs. So do they want to replace the DevOps? Or maybe they just want to say, I'm going to buy, $10 million worth of blocknet. I don't know. That's just the UTXO proof of stake blocknet that comes to mind. I love them for other reasons. But now that's how they've collateralized the staking. So they have assured security of the consensus mechanism for that particular blockchain. And this is how corporations are going to start fighting with one another. There's going to be a war, hash wars and collateral wars for securing the networks they're consuming. And it seems very obvious to me. Testnet, ladies and gentlemen. Everything is in testnet, and you are participating in testnets. All right, fine. Bitcoin and Ethereum, that's not testnet. That's real deal stuff right there. Frankly, that's the only two chains I think are real deal because you actually have some of the biggest corporations on the planet building products on Bitcoin and Ethereum. That's it. Everything else is tiny. Examples. I mean, even DeFi is just pure example. No big corporation is doing anything with DeFi. But guess what? Isn't it obvious that banks are going to want to start lending on DeFi platforms because it gets rid of their entire underwriting department? all that HR, all that paperwork. You don't need the paperwork. It's all auditable because it's on public blockchain ledgers. You just need one computer engineer to come in and write an algorithm for your to replace your entire underwriting and accounting department. Oh, let's take a look at the comments. I've been spieling for, good, it was a good 15-minute spiel. Woo! Jerry says, good morning. Nas Boyer, what's up? Finally, someone who can explain the DeFi thing. Well, it's not just DeFi. I started out with UTXO tech. We'll get into DeFi. I really wanted to talk about Digibyte, how it compares to Bitcoin, how all the other UTXOs really fit into the big picture, and I'll talk about DeFi in a moment with how I see the UTXOs. I'll get back to you, my man. I got you. Barry says, what's up? Jerry says efficiency will constantly leapfrog and improve. I mean, this is just starting. This is all testnet, as I keep saying. Yep. Nasboy, for what does UTXO unspent transaction output? UTXO chains are a script-based technology which is not Turing complete, which is not a full computational does not offer full computation capabilities, execution of algorithms, memory, so on and so forth. And that is what Ethereum changed. And that's why Ethereum is an ongoing disruption. It introduced the capacity to actually execute code in a decentralized fashion. My pleasure. My pleasure. Hi. I got the stream coming. It's going to keep on coming every day. This is what I do, and I love it. Nodes track spendable transaction outputs or outputs that have not yet been used in another subsequent transaction. Yes, exactly. These are unspent transaction outputs. These outputs are available to be spent, and that's the fundamental functionality of UTXO chains. Luis says, yeah, yeah. Woo-hoo. Hi says, what's the prospect of DGB in the foreseeable future? Well, scope and timeline is something that I talk about often, and I've talked about it in many live streams. Don't you need to really take thought in how you balance your portfolio. Digibyte's not going to change infrastructure. It's not going to be consumed as a public utility in the short term. There's too much entrenched infrastructure, and you got with regard to asset portfolio balance and position sizing, you have to think about the target market for disruption. So what target market is Digibyte trying to disrupt? Amazon, E2C, cloud services, Google, Microsoft, cloud services. I don't know who provides data management or record management for the healthcare providers. I mean, this is big stuff. That's billions and billions of dollars worth of contracts that can't just be turned off. 5-year, 10-year long contracts. So Digibyte, bear in mind, Digibyte's about to hit DeFi hard. So Digibyte is so undervalued. The whole question, really, in my mind, what's the catalyst going to be? And frankly, DeFi is probably the most ridiculous catalyst because it's not just a short-lived fad. DeFi technologically is something that exists in the real world. It's exactly what people do with carry trades, where you're able to lend at a rate that's less than what you could borrow at. And it's just lending, which is lending and borrowing, which is what banks do. DeFi literally does what a bank does. So if you ever hear anyone say that DeFi is something other than real technology, they have no idea what they're talking about. Lending and borrowing is a good part of what DeFi is. And lending and borrowing is what banks do. So if anyone asks you why DeFi is so hot, that is why DeFi is so hot. And what's even better, there's two ways to lend and borrow. Over-collateralized lending takes all the risk and places it on the borrower. So if I want to borrow 10, I got to put 15. I got to give 15 to get 10, which allows me to have a leveraged position, which means I have now 25 units of whatever position. So there's great merit to over collateralized lending, and one, it doesn't destroy the system in the case of systemic default, because right now the entire financial system is on the verge of implosion because it's based on under collateralized lending. Now, the other interesting thing is how under collateralized lending will get into the DeFi space. You need trust, and that's where the the stupid credit reporting agencies come in that got hacked and gave all information away to the world for free. What Equifax? Oh, disgusting security at these centralized organizations. It makes me nauseous. But the point being is we need that in a decentralized way. And what is it? Teller. Teller. Teller Finance? Yeah, Teller's getting a shout out. I hope you guys see this. You guys, that's a big deal what you guys are doing. So a decentralized way, or at least a software-driven way to assess a person's credit worthiness. The amount of time it takes for this stuff to happen in the real world is pathetic. Equifax is pathetic. It takes like a month to get a credit score update. That's done. You guys are done. You guys have a horrible business. Your software is horrible. Your product is pathetic, and you're done. Because literally, you have Teller Finance, which is a brand new product, and it makes your 100-year-old product look like 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 it's a decaying, decrepit mummy or something. You just got beat by someone that built the project in the last 6 months. There you go, Equifax. Eat that with your billion person data breach. Very frustrating. I just hit them hard, by the way. That was cool. I like having a live stream. Equifax. Captain Weber's in the house. Yeah. Always a pleasure. Lucky Logan. Yes. James is back. I'm back in the BNTV too. Okay, let's take a look real quick. I have my monologue screen up this whole time. I'm only following a couple of charts. And so, look, I got in Bancor. I popped the position. I probably popped it right about here. But this thing's ripping. So this is exactly what I was talking about. And this is how you find your bottoms. I mean, look at that. What do you got? You got about 14% rip. So you already got a 14% rip off the bottom. Now Ren's got the same thing going. It's a 13% rip. And Kyber, and how do you know it's a bottom? You don't. But the point being, here, check it out. What do we got in Kyber? All right, good. We got a 10% rip. Great. I got 15 grand I put in the Kyber. It's a quick 1,500 bucks in 24 hours. How do you know it's the bottom? You don't. But that's where, you watch the charts. You have to watch the charts, and you hit a stop loss. 11, you sell it if it breaks a certain threshold, but you got to also take into consideration like Ethereum and Bitcoin. The reason I felt that this is the bottom is because Ethereum and Bitcoin have slowed down. And when Ethereum and Bitcoin slow down, this is when value starts to flow back into the more speculative positions. And that's exactly what played out here. I mean, check this out. I mean, look at this thing got creamed. 43% in a matter of a couple of days. No, that's not. That's actually a lot. It's 24 days. So, but the point being is that's how much room it has to go up because Kyber is a deflationary asset with incentivized supply disruption. So this thing is assuredly going to traverse. Give me the daily. This is surely going to traverse its historical price ranges as the next 2, 3, 4 years unfold with the cryptocurrency cycle that everyone knows is well underway. And the same thing's going to happen with Bancor. Let's pull out the daily chart, give you guys some long-term perspective. This entire historical price range will be traversed and will likely end up in something comparable to what you see here on Red, which is basically price discovery mode. And clearly there's a massive retrace from its all-time high, which was very recent. Let's take a price reading on that. So we're about 36% down from all-time high. So bear in mind, like Ren, I don't buy and sell. I have the dark nodes. But this is why the charts are invaluable. They give you a capacity to find bottoms and find entries and help you size your positions and get a sense of your position timing. So I also have Digibyte up. This is one of the more important charts. I mean, look at this beauty. Look at this beauty. We had Digibyte break out, but then Bitcoin and Ethereum decided to do what it did, and Digibyte crashed back down. And right now, Digibyte is in the process of testing a 3-month-long symmetric triangle resistance. I mean, this is dating back to April 27th. April, May, June, July. And look, bam, this is why TA is real deal. It's not just fake lines on a chart. Several months later, we had the events of Bitcoin, Ethereum, we had whatever events, and it fell and it found support on a line that dates back several months. Absolutely fascinating because it's real deal. Should we be buying Ren too? I can't tell you whether to buy or sell, but what I would have done, I would have bought Ren probably around down here. Once I saw it make a firm bottom and start to make a higher high and a higher low. So check it out. So you see, higher high, higher low, higher high, higher low. And now you're above. So right now you'd be here. So you bought, let's say, here. And you'd be here. So you could set a stop loss at the bottom. You set a stop loss at 1288. And now everything that goes up is freebie. And it's protected to the downside. And then you can do a trailing stop loss by adjusting the stop loss higher and higher to ensure that you have a certain amount of gains locked in. And that's the way it works. Yeah. Oh my God, James, what's going on with Ren DGB? Absolutely incredible. And it's not just Ren DGB. It's Ren all UTXO. It's the whole UTXO space that's about to be cross-chain into Ethereum DeFi, and Polkadot DeFi is coming on strong with Akala. I got Akala up here. I mean, this is just barely starting out. I found this too today. DeFi Pi looks really cool. You see, look it up on Twitter. Get some information before checking out their presentation. Yep. But Akala and other DEX implementations for Polkadot and DEX implementations for Cosmos. This is where it's at. There's no other ecosystem. There's none of this on Cardano, on EOS, on Neo. There's nothing. There's no developers. There's no Tron. If you look at the developer activity on Polkadot, Ethereum, and Cosmos, it doesn't exist on these other networks. And that is where you have to follow. Follow the developers. Follow the money. Did I say follow the developers? Follow the developers. Follow the developers. Yes. All right. Take a look at the comments. We're running out of time. Yes. Where did DD Jim go? Jim is taking care of his. Yes. A little private convo. Maybe. I'm going through the tweets, going through the comments. What do you prefer, line charts over candlesticks? I don't know. I like the charts because I don't like short term. And candlesticks, I guess you could do long-term candlesticks, like hourly. I don't know. I like line charts. Everyone has their preference. And, in the end, it doesn't matter. What works for you is what counts. So just find what works for you and follow a system and use it. And don't deviate from a system that works for you. All the best from Norway. Kajel in the house, my man. Oh, no. It's always a pleasure. Always a pleasure. Pleasure. Yes, some word like that. Also going to keep bleeding as FBTC keeps rallying. Well, I don't have the charts up, but here's the kicker. Ethereum and Bitcoin have stabilized for the minute. And that's exactly why you see stability and the bottoms in the altcoins. That's exactly what's going on there. So let's go back in. Yeah, so that's exactly why you're seeing these local short-term bottoms, because Ethereum and Bitcoin have stopped rallying, but they're going to start rallying. So this is why you got to keep an eye on these things. You got to keep a close eye on these things. But look, if you play it smart, you just got a 10% rip in a matter of a day. And BNT, you got a 14% rip in a matter of a day. And Ren, you got even more now. You got a 15% rip in a matter of a day, give or take. So this is how you play it, and then look here. How about this? So you made 15%, sell off half, and now you just if you put $100 in down here, and now it's worth 115, and you sold off 50% of it, which is 57.50. Yeah, I know it's tiny, but that's how you grow, and that's the whole point. And then it goes up another 10%, then you lock in another 50%, then you lock in another 50%, and then before you know it, it's dipping. And now you're doing this whole cycle over again, going from the bottom to the top, selling as it goes up, doing it all over again. So it's time to get on the offensive instead of playing the defensive. It's time to open up TradingView.com. You type in your tickers in the top left, REN BTC, KNC BTC, BNT BTC, DGB BTC. So tick it in. And the only way you're ever going to start to feel a little bit of comfort with these types of interfaces is to actually open it and click it and then ask questions. And that's what this live stream is for. Ask questions, and that's what my Twitter's for. Ask questions, because that's how you get on the offensive and start to understand the technicals, which is what we ended this show with, and the fundamentals and the macro narrative, which is what we started this show with. And I'm going to end this show on Kyber being the most incredible asset from a sound money perspective. Is a deflationary asset with an incentivized supply disruption implementation. Bitcoin is decaying inflationary. Digibyte is decaying inflationary. REN is decaying deflationary. Fascinating. But Kyber is accelerating deflationary. There's no other asset that I've seen that has the protocol properties that Kyber has. Accelerating deflation. Not only so not you can't just have an asset that has accelerating deflationary properties and be like, whoa, it's just going to keep going up in value, because there's been a bunch of assets over the years that have been ridiculously deflationary to the point where they don't exist anymore. But what's so special about Kyber is that it's infrastructure. This is real deal utility. This is liquidity pooling. This is the central nexus potentially of the entire liquidity pooling space. And that means it has perpetuity. It has purpose and meaning. SB says, many thanks, Noah. Hopefully soon you will have 2 million followers. I could only hope. I really want to quit my jobs. Are there things you are looking up to in August for Digibyte? Yeah, REN DGB is going to be pure fire. I think Digibyte could really rip. Digibyte is due. I mean, this thing should be 1,000. This thing should be 10,000. Come on. It's just not appreciated for what it is, the protocol properties as compared to Bitcoin. It's just not. People get hung up on that whole consensus thing, and I'm like, no. If a company spends $1 billion migrating their current $5 billion hardware deployment to a public ledger, and they choose Digibyte, it doesn't matter what the hash rate is, because they're going to secure the crap out of it. And then another company is going to secure the crap out of it. Why? Because using Digibyte is going to produce savings. And the second a company proves and shows that they're going to save money by using a decentralized implementation rather than a centralized implementation, then it's going to be a cascading effect where a company does it, then a company does it, then a company does it, with each one adding their own security implementation, which is each one's going to be 100 times the hash rate of whatever the hell is deployed currently using from the general public. And that's it. You can't compare the current hash rates of these projects to what they're going to be when the big corporations start to consume them, and they will consume them because it's going to save them a shitload of money. And anytime the technology works, it's profitable or it saves money, saving money is equivalent to profitability, and the target market is disruptible. 3 things for inevitability. It's inevitable. It's a matter of time. Gentlemen, ladies and gentlemen of the crypto space, Tuesday, 12/34, July 28th. Always a pleasure. These are my favorite topics. Get on Twitter. Hit the comments on YouTube. I prefer Twitter. What's your favorite topic? What am I going to talk about? I should set up a DAO, and we should start voting on these things and have a governance offering. All right. I wish you all a wonderful Tuesday. I'll talk to you soon. I'll see you tomorrow. Peace.